Hey everyone, welcome to the weekly review. Now that the first quarter ended, let's look at the long-term picture again a bit. This is an update on the start of year chart on SPX. This is a logarithmic chart, and if you remember from the start of the year video, the target was 5400 for SPY for the year. We are not quite there. Maybe it's a bit more than 5400. It's hard to accurately put it on the chart, but let's give it a shot. Assuming we do it next next month, it would be like 50, 5433. If we do it a bit later, it's gonna be higher. Um, but I just wanted to look, take a step back and look at the long-term picture as well. And in theory, we will be hitting a wall when we get to that area. We have a combo of rising wedges that should put an end to a rally. And I actually don't mean it for now. I mean it for the year. But we will see how this plays out. This type of rally is very rare outside of crash scenarios or flash crash scenarios like this ones here. And we are very close to the end of it, in my opinion. Just wanted to take a step back and look at this again. We still have some upside left for the year, but not that much. And I think a pullback is imminent now. And multiple reasons for this. Mapped out the quarter levels. So this is what the quarter looked like. Low here at 46, 466.43, mid at 495.52, and high at 524.61. It was a 10% quarter, 10.05, quite large, and seeing signs of fatigue everywhere basically. Uh, Timing this precisely is very difficult, but this this looks like we are nearing its end, like the divergence is meeting its end and should resolve fairly quickly. Now the question is, how deep will this pullback be? And uh, most likely it's going to be relatively shallow. Like the most obvious target is this 495 area, which is the mid quarter, the previous quarter. It's probably going to be somewhere around the 100 MA moving average. Uh, as it moves higher, it depends on how quickly we get there. But that's a very shallow pullback. I'll show some AV ups in a second, but let's look at the how big it would be. Like this is for 549. Um, there are some AV ups in that area as well. So we have the 2024 yearly AV up, which is 496. I think we can overshoot below it a bit. Um, the October low one is lower, like 477. And I think that if this area from 495, 496 doesn't hold, this would be the target around 480. We have the previous high one much lower, and that would be a super extended move target. The one from the all-time high, it's much lower, so that's not happening anytime soon. And the one from the October low, which but the one for Dr. Bolo, which is the same as the one as ATH right now, basically. And I don't think we see those ones unless we get a sustained bearish period, which seems very unlikely. So first target this one from the yearly and also the Q1 midpoint with potential for a bit of an overshoot. And if this doesn't hold, then the 480 area, which is also a horizontal level here, this will be the target, like 480-ish target. But I think this is going to be bullish, and I'll show a few reasons with previous similar rallies. So one that we had is the 2021 from the end of 2020, which lasts until the bear market started. And it went up, it went up, it went up. The final leg of this rally, we had a moderate pullback, which was around 5-6%, which is exactly what in theory we should be getting now. Maybe a bit more because we should be going a bit higher next week. So that's relative peak to bottom. Then we have another push up. We have a period of distribution in which it goes sideways, and then a bigger pullback. And remember that this could have been it for the 2021 pullback. Just this. We were starting to go up crazily, and then the negative news showed up, and we got this. But in general, this could have been it. Like, look at how similar this part here looks to this part here. Then this happened. We were on our way to this and this, but we didn't get a negative catalyst, and instead of doing this, we did it, but in the other direction. Another comparison is before the 2020 crash. So we had a big rally here, a sustained rally, for prolonged rally. We had one more substantial pullback, but it didn't break the cycle. This once again was probably like 5%, maybe even less, 3%. And then we went up again, and then we had a bigger correction. Um, and this usually repeats, like even here into 2018. This was a pullback, but then we went higher, and then we had the actual pullback in December 2018. And this is most likely what will happen now. So we won't get the 10% now either. My base scenario is basically, oops, didn't want to move that. Basically this will be like 5-6% because we probably go a bit higher, like I said. Then we go higher, we hit that 540, mid 540s level in that is the yearly target based on the SPX logarithmic chart. And then we do a bigger correction, which could be the beginning of a bear market, could be the just another pullback. Uh, that will be decided basically on the retrace, like we have here, retrace, and then does this make a new high? Does this stop for some reason? And then we go lower, or we get basically this. We go lower, then we go back to the highs, and then another leg up or another leg down, like this. Um, yeah, so that's kind of it for SPX and the reasoning behind it. There's more to it than this. On the delta profile, we have on SPX 5K, the 5K level is huge, and I wouldn't expect it to be lost. More like we we go below 5K as low as 595, but that will be more like an intraday low, not where we close. So we go below this, we close above it, and then we shoot higher, and we don't look back from there. And the timing for this is imminent. What I would like to recommend due to this is this. So we have VIX versus SPX, SPY, and we've had several smallish corrections in SPY over the last couple of weeks, but nothing more than like 3%. And given that the expectation for this one, at least my expectation, is that we get like 5, 6, maybe max 7%. If we go higher, like for example, if we go to 530, 40, and we go 495, that would be 6.5. This is why I mean more than 5. We didn't really get SPY puts didn't really pay off. And I'll compare this level here. This was peak to bottom on SPY, minus 2.54, and peak to bottom on VIX, peak to top already, 48%. So I think it's time to give up on SPY puts or any type of market puts or individual name puts because they don't work in this environment. I mean, they will be profitable, don't get me wrong, but would you rather have SPY puts for a minus 2.5 move, or would you rather have VIX calls for a 40% move? Because this is quite reasonable for VIX, even if the market doesn't drop that much. So I think it's going to be a lot more profitable to play VIX calls than play market puts or any other individual name puts. Of course, this could be wrong on individual names because you don't know how much something will drop, but uh, getting VIX calls as opposed to market puts seems like a much better idea than the market puts. So yeah, this is the last thing I want to add here. And looking at the OI profile for VIX, 12 is a huge level. Like there is nothing below 12. Nobody expects it to go below 12. And we may have already bottomed for VIX here. But in case we haven't and there is a last surge up in the market and a last surge down in VIX, I think 12 is a the absolute rock bottom we can see. And getting VIX calls there for like 2 months out should be, there's no way that won't be profitable in the next couple of weeks. Yeah, that's the reasoning. Other than that, things stay the same. Like expectation is for Qs to max out at 450 if we ever get that. IWM went a bit above 12 to 10 and get rejected. It can go do a retest here as well and get rejected. For DIA, it's 400 that should be a top, and for SPY, that for 525, 527 range should be the top, with the potential to go to 500 is as an extreme. 500 is a definite short. Yeah, that's kind of it for this week. Just be patient. I think we are days away from this happening. Uh, very high chance that we top out next week and we start the pullback. Uh, Things are lining up and the wait is probably finally over. So a bit more patience. Like I said, I think it's more profitable to play VIX calls other than compared to market puts. So use your best judgment and get in the positions you want. Until next time, have a good one. Bye bye.